Welcome to another edition of the Murfreesboro Real Estate Report. This week we have some really exciting things that are going on in the world of real estate, especially here in Rutherford County. So I look forward to bringing this to you. I am John Turner, the team lead of the Turner Victory team at Onward Real Estate. And we bring this report to you on a weekly basis, just keeping you up to date with what's going on in Murfreesboro, Smyrna, Laverne, Eagleville, in all areas of Rutherford County. So this is really localized information for you from the real estate standpoint. So without further ado, let's go ahead and get into what we want to talk about this week. First of all, let's just look at what happened this week. Currently, there's 1,352 available homes on the market. 109 of those went under contract. I'm sorry. Well, 109 did, but we also had 109 new listings. So it's interesting. Both of those numbers are exactly the same. 51 closings this week. We had 55 delisted, which would be expired or canceled. And over the past 6 months, we've sold 2,584 homes. This gives us a 3.14 month supply of inventory. Now, I will tell you, I think you should look at some of these numbers pretty closely over here in the month supply. Below 300,000, we don't have a whole lot of supply at all. 1.1 month supply of inventory there. And then we're in the below 3 whenever we're 500s or less. But once we start getting above 500,000, we have 3 different price ranges now that are in the 4s. So I just found that pretty interesting. But then if you look at the 900,000s, we only have 2 months supply. You would think some of those upper markets would be a little bit slower, but in some pockets they are not. We'll talk about that here a little bit more. But also remember, as I cautioned you, the 900,000s are such a small part of the Rutherford County real estate market that it's real easy for those numbers to move pretty quickly one way or another based upon a couple of new listings coming in or a couple of new sales. We pended a little over 7% of the market this week, which is huge. So there's our active inventory by week. We've got the past 3 years over here. On these charts, the gray line is going to be 2023. The red's going to be for 2024 and the blue's for 2025. And then we have this gold line that's definitely a lot smaller, a lot shorter because we are here at the beginning of the year, but this is the 2026 trend. What I really want to get to over here is looking at our pendings by week. Looks like a bunch of squiggly lines, doesn't it? But over here, if you look at this year, 66 pendings the first week of the year, 94 the second week, and 109 the third week. Look how this compares to the blue line, which is 2025. It's following the same trend, except quite a bit. The data is quite a bit higher. 77 last year, 109 this year. For this week, we even outpaced 2024 numbers. So we've been talking about seeing an uptick in the market. This is what we're talking about here. I got some notes. Let me switch back over real quick over here so I could on here. So some notes. We went over at 1,352 active listings. Our inventory is up about 2% right now over last week. Last week. We are starting that trend where this time we just start seeing inventory start rising, and that will happen till probably the fall, and then we'll see it start dropping off again. That's just kind of the normal cycle here in Middle Tennessee. Our pending sales were up 16% over last week, but like I said, quite a bit more than that over this time last year. Month supply has stayed about the same. Let me see my other notes. The average sales price for the past 6 months in Rutherford County has been $483,000, with the median sales price being $429,000, and our average price per square foot is $225 a square foot. The median is $215. Our average days on the market is 35 days, and across the board, there's a 98.5% sell to list ratio. So things are selling for 98.5% of what they're listed for. Some of the interesting data that we have not talked about much at all in this report, but we're starting to follow it a lot more closely and look at historical data, is actually some of the leading indicators. Showings are one of the leading indicators, and in the below 300,000, especially in the 285 to 290, saw 5 showings per listing this week. That's pretty high. Believe it or not, in the luxury market, whenever you're looking below, like in between 1.1 and 1.2 million, you would think that would be slow. There were 8 showings per listing in that market this week. So that's a little bit of a surprise. But one thing that we have seen is that although we would expect our luxury market to drop off whenever sales are down, we have seen that market has not been as impacted with the higher mortgage rates. So that has remained stronger than what I would have predicted going into this cycle, and that trend continues. So pending sales jumping 16% week over week. What this tells us is we are getting that New Year push. A lot of people think, man, I need to wait till the spring to put my house on the market or whatever. Spring is, generally speaking, a time that sales rise, but we have buyers jumping back in the market right now. And a lot of that has to do with the mortgage rates, which we'll get into here in a minute. We are really in a balanced market, technically a seller's market still, with a little over 3 months supply of inventory. Our sweet spot in this market still remains the $300,000 to $450,000 price range. And then, as I said earlier, our inventory is building a little bit, is starting to build again, which is what you would expect right now. Let's go back and look at mortgage rates. We've talked about this. Look at this steep decline right here, 6.06 across the board for the 30-year average. This time last year, so this has January 15th at 6.06. If we go back to January 16th of last year, we were 7.04. So basically a 1 point difference, in the past 365 days. That's huge. I wanted to put a 5-year trend on this because I want to show you something. I mean, back here 5 years ago, yes, we know they dipped. They dipped to 2.73. Man, that's crazy to even think back on that. And it's crazy to think that was 5 years ago, man. But if you will look right here, and we've talked about this before, back in February of 2023, prices hit 6.09, or mortgage rates did. Back in late September, early October 2024, same thing, right above 6. And it's where we are right now. When this happened, we saw a spike in homes going under contract and homes selling. So going under contract within the next few days and then selling, 30 to 45 days later. If you are thinking about selling, you may want to jump on this trend. We also noticed, and we pointed this out the past couple of times, mortgage rates went up pretty quickly. There, you could see a steep rise here. You could see it here. And not that they just went off the charts, but they went back up. And we did notice, because these rates come out on Thursday, we did notice that on Friday the rates had trended back up a little bit. It's just the normal cycles, but you need to take advantage of these whenever you can. Will it go back up as high as what it was, this time last year? I don't think so. I think we are going to stay pretty level. If you notice, we did not see a huge drop right here either, whereas over here, we'd seen a huge drop. Over here, a pretty significant drop. So I think that by us slowly creeping down to this number, I think if we go up, we're going to slowly go up, or, remain kind of steady. And that's just what the data is showing us right now. Another interesting thing, another leading indicator, is whenever you start looking at the MBA purchase index. So what this is the Mortgage Bankers Association puts out numbers of basically loan applications. They have it for the refinance side and for the purchase side. So this is the purchase side. And the index for this past week was 184.6. So that means there were a lot more applications made for home purchases versus, you got to take into account here, this was over the holidays, so that's down a little bit. But back in November, it was up also. But you've got to go all the way back to the summer before we saw anything close to these numbers. And it's really interesting because if I put this on a 3-year trend, this is some of the highest numbers we've seen in the past 3 years, going back to the end of 2023 or the end of 2022, early 2023, and we did see a spike in sales over there. Now you say, man, those numbers are huge. Well, you put the 5-year track on it and go back 2021 and 2022. Look at how many people were getting approved for mortgages or making application for mortgages anyway. This doesn't necessarily mean approval, it's applications. So these numbers in no way compare to back to 2021 and 2022. So I don't see us getting into that crazy of a market or anything. But what this does tell me is that we've got more buyer demand out there. That's what we're seeing on the streets. That's what we're feeling. Whenever you start seeing this go up, you can figure in the next 3 to 6 weeks, these people who are making loan applications are probably going to have something under contract. So that's just important information there to know, to keep up with. We're tracking things and we're constantly tracking things, but we're trying to enhance what we're tracking because not only do we want to be able to tell you what is happening now and what has happened in the past, we're actually looking at it for some forecasting too, trying to help our clients out. We're working actually very diligently on a program right now, which is going to take all this and really bring it together and help us with our buyers and our sellers. So like I say, not only do we know what's going on with the market, but hopefully do a little bit of predictive analytics based upon the data so we can see what's going on and what we think is going to happen in the next few weeks. So really something we're excited about. We're interested, or we're excited about, and we're really excited to be showing it to you before too long, and then, of course, helping our clients with this. So this is what I've got for the report this week. So basically the takeaways this week is we're in the new year. Inventory is starting to build up a little bit, but it's seasonal the way it's building up. Mortgage rates are still working in our favor, and buyers are starting to come out because they're noticing those mortgage rates, and they're getting out and they're looking at homes. We've got showings that we're up. Like I say, we're looking at that showing data as well. And so everything's pointing to 2026 having more units sold than we did in 2025. I said last week, I think 2025 was the bottom of the market here in Rutherford County. I believe when we sit here a year from now, we're in 2 years and 3 years from now, we're going to look back and see that. So no huge rebound, no fear of prices just going crazy right now. The one thing we did not talk about that will impact this some is what's going on in Washington and what they're trying to do. I think this week they came out and basically said they're going to scrap the 50-year mortgage, which in my opinion is not a bad idea. There was a little bit more talk about mortgage portability, and that's where you take your mortgage, your 3% mortgage or wherever you have from this house, and you go purchase another house and use part or all of that to purchase that house, and you kind of blend it in with your new rate. So we'll hear some of that come out. The big thing is that we are hearing a lot of different entities really talk about affordability right now. So I don't know that there's going to be a one solution that just fits everything and cures everything. But the bottom line is, and I've preached this now for a while, that home prices, home payments are out of line with wages. And we've got to figure out some way to get that in line. And I am glad that over the past couple of months, there's been a lot of talk in Washington about that, because I think you'll see some policy that comes out that will help ease that some. Again, we do not want the craziness of 2020 or 2021 because it will drive prices back up. But we do want something that is going to help people, especially those first-time home buyers, get into a home, because that's the way a lot of Americans actually build their wealth, is through home buying. So trying to get people into homes. The administration's already come out and said they're trying to keep industries, real estate investment trust out of home buying, because they really do want to focus on getting the individual owner into the home. So I'm excited, like I say, that there's talk about that. I'm excited that things are getting a little bit more affordable for people, and that that buyers are now starting to come out. If you follow this every day, if you're in this industry, hopefully you're excited as well. So 2026 is going to be a great year in Rutherford County real estate. If you have any particular questions, please comment below. Please like this wherever you're looking at it. And if you want to talk about real estate, reach out to us. If you have any questions, reach out to us. We're here to help you. But until next week, I hope you make it a great week, and we will bring this report to you again next week. Thank you.